project. We're going to be rating my six funds on three categories: performance, volatility measures, and management and fees. So the first, for the sector funds, I picked two technology funds: the Fidelity Select Software and IT Services portfolio and the Ridex Technology Fund Class Investor. So based on just returns, we can see that the Fidelity Software portfolio clearly has higher returns and less expenses, meaning it costs less money to run and maintain and returns higher, has higher returns. Now, based on sensitivity measures and volatility measures, we have standard deviation, 3-year Sharpe ratio, beta, and R squared. All of these measure how volatile and how sensitive these funds are to markets and market movements. So the lower standard deviation we want because it's less volatile, which is in the Fidelity Software Portfolio Fund. The Sharpe ratio measures, we want that to be high because it measures how much return are we making assuming risk. And as you can see, the Fidelity Fund offers a higher 3-year Sharpe ratio. Beta we want low because beta indicates sensitivity, and we don't, whenever markets move up or down, we don't want our funds to be too sensitive to that and move too far down or of course too far up. But as you can see, Fidelity has a pretty conservative beta value. And then if we look at R squared is just correlation with markets. So as markets move up or down, how much are the markets in these funds correlated? As you can see, the Ridex Technology Fund is more correlated with markets where the Fidelity Fund isn't. Now, if we talk about management, the inception date or when this fund was founded was the Fidelity Fund was in 1985. The Ridex Fund was founded in 1998. So the Fidelity Fund has a much longer track record and much more information and data on it. The fund manager for the Fidelity Fund has been there since 2014, where the Ridex managers have been there since the beginning, since inception date, and another manager since 2008. The Fidelity Fund has a much larger asset portfolio with 6.2 billion compared to 126 million. Turnover rate for the Fidelity is 28%, so it turns over its portfolio 28%, 28% of its portfolio a year compared to 320%, which is really high relative to other funds in this sector. Minimal investment is 0 for the Fidelity compared to 2,500 for the Ridex. That's just a barrier to entry, so for future investors, you might want to look at that where you don't have to have any minimal initial investment for Fidelity where you do for Ridex. So loads, neither of these funds have loads front end or back end. Expenses is just how much it costs to run the fund. So as you can see for the Fidelity, 0.73% compared to 1.73%. So relatively high for the Ridex. And then a 12B-1 fee is a distribution and marketing cost, which neither of these funds have. Moving on to domestic, we have the Fidelity Blue Chip Growth Fund and the HCM Tactical Growth Fund Class A. So if we look at both of these returns, you can see that they both have high returns, but the HCM Tactical Fund has much higher expenses. They both have similar returns, but as you can see, if the HCM Tactical 5-year and a 10-year aren't available, which we'll get to later. Moving on to volatility measures, you can see the HCM Tactical is much larger when it comes to standard deviation, so it's a lot more volatile over time. A 3-year Sharpe ratio is how much we are gaining in return relative to risk, which the higher the better. So the Fidelity Blue Chip Fund is higher, which we are earning more relative to the amount of risk we're taking on. Beta is again a sensitivity measure. We want that to be as low as possible, which we see with the Fidelity Blue Chip Fund, which is 1.14 compared to 1.62. So the Fidelity Growth Fund does not move as much relative to markets as the HCM Tactical. R squared again is how much it correlates with the markets. They are fairly uh, uh, correlated, highly correlated with the indexes. Moving on to management, the Fidelity Blue Chip Fund was founded in 1987, where the inception date for the HCM Tactical was 2014, so very recent. This fund was founded. Fund managers for the Fidelity has been there since 2009, where Vance Howard for the HCM Tactical has been there since its inception date. The Fidelity Blue Chip has 25 billion in assets compared to 203 million, which is a substantial difference. For the turnover rate, the Fidelity Blue Chip Growth Fund turns over around 40% of its portfolio a year, where the HCM Tactical only moves around 18%. Again, moving to minimal initial investment, the HCM Tactical has a $2,500 fee, not fee, but initial investment, where the Blue Chip Fund doesn't. Again, that's a barrier to entry, less attractive for future investors. The Fidelity Blue Chip Fund does not have a load, which is very attractive, where the HCM Tactical does a 5.75, which is a pretty substantial load, front end or back end. When it comes to expenses, we have 0.72 for the Blue Chip Fund and a 2.55% for the HCM fund, which is, again, how much it costs to run the fund. And for 12B1 fund, 12B1 fee, we don't have any for the Fidelity Blue Chip Fund, where we do have 0.25% for the HCM Tactical and a redemption fee, which is a holding period charge, which of 1%. So relative to returns, volatility, and management, the Fidelity Blue Chip Fund is more attractive. Lastly, foreign. The two foreign funds, we have Fidelity International Index Fund and Goldman Sachs International Equity Insights Fund Class A. So, as you can see, the returns are very similar, just within 1 or 2% of each other over 10 years. And then moving on to volatility, again, very, very similar with standard deviation. So they move about as volatile as one another. And then with the Sharpe ratio, we have a 0.28 for the international fund, and the Goldman Sachs has a 0.45. So the Fidelity International Fund is not doing as well when it comes to gaining return for its risk. The Goldman Sachs fund does that better. When we talk about beta, as we said earlier, just indicates how sensitive they are to the markets, which they're very sensitive. So with a 0.95 and a 0.93, they are fairly sensitive to market movements. And R squared, 0.97 and 0.93 is just a correlation between the markets and these funds, which is they're very highly correlated. Inception date, as we can see, is both 1997. The fund managers for the Fidelity International Fund is Geode Capital Management since 2003, and the fund managers for the Goldman Sachs fund is Len, James, Osmond, and Takashi. And Len's been there since the inception date. The big difference is assets. The Fidelity International Fund has 21 billion, where the Goldman Sachs only has 2.6 billion. Turnover rate for the Fidelity International Fund's 4%, and Goldman Sachs is 161%. So, as far as changing equities within the fund, Goldman Sachs is much larger. Again, whenever we move to minimal initial investment, that's a barrier to entry, as stated earlier, with $2,500 minimum initial investment for Goldman Sachs. When we talk about expenses, that's where this Fidelity International Fund is much better than the Goldman Sachs, with a very low expense ratio of 0.045 compared to 1.19 and 1.30 with Goldman Sachs, and a 12B1 fee, which Fidelity International Fund does not have, and the Goldman Sachs fund does, with 0.25%. So overall, I would be more interested in investing in the Fidelity International Index Fund because of fairly good returns, highly correlated with the market, and considering low fees and a pretty big asset portfolio. Thank you.